Hello and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on today's episode, it's part 2 of my interview with Andy Schectman, an expert in the gold and silver space and the CEO of Miles Franklin Precious Metals. We're going to talk about Russia's central bank announcing plans to add silver to its reserves, the manipulation of both the gold and silver markets. Where does it stand today? Is it coming to an end finally? Silver's use in military applications and what that means for global conflict around the world, and a lot more. Our focus will be silver, so I hope you enjoy my conversation, part 2 with Andy Schectman. So Russia's central bank has announced plans to add silver to its reserves. This is from Numismatic News. Russia's draft federal budget for the coming year includes plans for the nation's central bank to continue adding gold, platinum, and palladium reserves and acquire silver for the first time. What do you make of this? Do you think they're looking at it as a monetary metal or as a strategic metal? And could other central banks or nations start adding silver to their reserves as well?
Jesse, to me, there's no question in the world, but silver is strategic. And there's an initiative in Canada by mining companies and banks to have Ottawa reclassify it as such. And it should be. I think it is strategic. You have 8 commercial banks in the West doing their damnedest to hold the price down. And that's been shown over and over and over again with, 800 million ounce shortfall or short position rather on COMEX, a 4-year structural demand supply deficit in mine supply. Between 4 and 6 billion ounces short on the LBMA, which is a much more opaque market. That's why we don't know exactly how much, but estimates say between 4 and 6 billion ounces by that same cast of 8 or so Western commercial banks, a platform where they're trading 290 million ounces of silver per day, which is basically the entire float of the LBMA, which has 800 million ounces, of which 500 belong to the ETF. So they have 300 million ounces that are unencumbered. They're basically trading the entire stash every day, yet they admit that those numbers that they publish of 290 million ounces traded on average per day are 10 times understated, as they only post the final settlement number. So in essence, they're trading 3 billion ounces of silver per day on average, which is 3.5 times annual global mine supply. The numbers, the price discovery on silver are not known. And I mentioned in our last interview about China, Sean Kunkun says, he's the CEO of Dolly Varden, that indeed they are flying all around Latin America, buying the silver concentrate and the silver doré directly from the miners and refining it, paying up to double what the West will pay, and then bringing it home and refining it there. They are the largest, China is, second largest producer of silver in the world as well. The fact that Russia is now saying we're going to accumulate it, I don't know of another country that's done that. It's a very big deal. You look at India, just in the last few months, they imported another 150 or 60 million ounces of silver. They've bought close to 900 million over the last 4 years. They're little by little draining the world's exchanges. And you look at this coordinated effort between India, who's been on a nonstop accumulation tear, China, who is the second largest producer and now is flying all around the world buying doré and concentrate, and Russia, who is now adding it to their national stockpile along with palladium and platinum. And they're the major production center for palladium and platinum there in South Africa. It's a big deal. And I think being naked short in this market as a commercial bank is an existential threat. And I think that's one of the things that these countries know. The BRICS talk about building a grain exchange. And in the discussions, the gentleman who was tasked at developing it publicly says, we produce and consume more grain than they do in the West, yet we have no ability to control the price. It's controlled on COMEX, but with the development and rollout of the BRICS Grain Exchange, that will change. Well, they're building the BRICS Gold Exchange as well. And with the with the development, of course, and the actual accentuation of the Shanghai Metals Exchange, which over the last half a year, when you add the cumulative volume of the Shanghai Metals and Futures Exchange together, it's surpassed COMEX. It's the number 2 most heavily traded platform in the world. These exchanges are gaining legitimacy, unlike COMEX, where bars are rehypothecated, 15, 16, 1700% or more, sold over and over and over and over again, where if you stand for delivery, 1 out of 17 will be lucky to get delivery, if not much more than that. You look at Shanghai, in order to buy or trade a contract for silver, you have to buy a bar directly from one of the 6 or 7 approved refineries. They laser etch a number on the bar that is directly attributed to a certificate. It's transparency, it's authentic, and it provides, a confidence in a system where our Western rehypothecated opaque system does anything but that. See, these countries understand it's the Achilles heel, and they're slowly draining the exchanges rather than go in and buy everything up that they could and would end it just like that. They're playing the long game. And now that you see Russia jumping into the mix and saying, no, we're going to start to accumulate it for our state, this puts some of these Western banks on notice. And I'll tell you, to be naked short to that degree is enough to bring down a bank. And I talk about, Chris Marcus's interview with Bart Chilton, where I think everyone should watch that. Chris Marcus, Arcadia Economics, where, Bart Chilton, the head of the CFTC, admits that when Bear Stearns failed, part of the reason they failed is because of their massive short position in silver, which went from $21 an ounce to $9 an ounce, and they failed. Now, I don't know if that was the primary driver, but Chilton says, look, they called Jamie Dimon into the office and told him he needs to take, this position over. And Jamie said, well, we'll be in violation of position limits. And they said, Bart Chilton said that Hank Paulson and Ben Bernanke said to Jamie, that's okay, get your house in order. Here's a period of time to do so, and all will be good. Fine, he says. Well, at the end of the time period, Bart Chilton went into his supervisor's office, which would be Hank Paulson or Ben Bernanke, and said, look, they're in violation of our agreement. They didn't pare down their position. In fact, they've increased it. They need to be prosecuted. And the answer was, back down, Bart. It's a political decision. Now, he died a week or two later. Was it a man clearing his conscience who knew he was close to death, or was it something more nefarious, or was it just a coincidence? I'm not going to say, but what I am saying is that this was enough to bring down, or partially bring down, a bank like Bear Stearns for being on the wrong side of that trade. And Bart Chilton, the former head of the CFTC, all but admitted that. What does it mean when you have these Western banks massively short, trying to hold down silver with a 4-year-long now structural supply demand imbalance, and then all of that omitting, as we've talked about before, the military's role in all of this? There is no mention of military in the supply demand fundamentals, and yet there's copious amounts of silver in all of these high-tech weapons, as we've talked about before. So yeah, I think it's a massive deal. And in fact, I think it's strategically being done. And I think it should be something that puts these Western banks on notice that this is not a smart thing when you have sovereign nations and sovereign wealth funds that work on behalf of these countries that are using the suppression, jiu-jitsu, if you will, using the leverage of your opponent against them. That's exactly what they're doing. And that's why they're not bitching yet, because they're in the siphoning phase. They'll siphon as much as we can at these stupid prices, because it is a strategic metal and it is not industrial. It is strategic. And if you realize that, yes, it's needed in green and digital and electronics and all that stuff, but it's also needed in a military capacity. And to me, that's why India, China, and Russia, are hell-bent on accumulating it, because it's far more than just industrial.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARK SGO and owner Ian Everard. Have bought from ARK, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARK Silver. He is a straight shooter. So go to arksgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arksgo.com, and make sure to tell him that Commodity Culture sent you. Yeah, there's a bit of a dichotomy there because, as you spoke about with the its use in weapons, its use for military applications, this could be part of the reason that Russia is starting to accumulate it, but it also gives a reason for manipulation of the price to continue, because if the price gets too out of control, suddenly it becomes much, much more expensive to wage war. How do you look at that dichotomy and when you look at the world today in terms of the growing global conflict and the amount of silver, which is not really talked about, that's needed for that to continue?
Well, I mean, and that's probably why they're all in a rush to accumulate it. Because, I mean, it's silver's called inelastic because you don't need so much of it in all of these components. You go to silverwars.org and you'll see just how much silver is needed in all of these high-tech weapons. 500 ounces in the cone of a Tomahawk cruise missile. And let me just see here. I don't know if I did this the last time we were together or not. Am I able to share my screen with you? Here is this is kind of the presentation that I've done, and I did this at Rick Rule's conference. And if you see right here, the present consumption of silver for war purposes is at the rate of 100 million ounces a year. This is 1942. You can Google S.2768. This is a subcommittee hearing. And it says it's only a matter of months before we'll need 200 million ounces per year. And you go here to the supply demand numbers from the Silver Institute, and you don't see anything in the way of military at all. Electronics, photovoltaic, that's solar panels, brazing, photography, jewelry. Where is it? And as a result, this is why these are all of the commodities traded on the COMEX. The red represents the biggest 4 commercial banks, and the green is 8 commercial banks. It's the 4 plus another 4. It's the largest concentrated short position here in silver of any commodity traded on COMEX. Why the hell would they be doing this? It's as dumb as a mud wall. Look at crude oil. We're way down here. Remember when they made it negative 40 a barrel? They have the ability through these levered contracts to do just that. And then you look at this, and this is what I was talking about, the LBMA. 800 million ounces, 500 belong to the ETF, so they have 300 million ounces. But you can see this drawdown. They are drawing down the stockpiles of precious metals using the suppression of the Western markets to do just that. So it's a big deal. And I think this is a very strategic deal that these countries, these BRICS countries, understand. Russia understands it. China understands it. India understands it. And they're looking at silver as anything but industrial and far more strategic. And I think using the Western stupidity of suppressing these markets to fight these wars and the military-industrial complex. I mean, you got to believe that it wasn't Biden who has been making these overtures of giving long-range missiles to the Ukraine as he's walking out the door. Who's pulling the strings? It's the people, probably the military-industrial complex, who's making these decisions. And this is why they've needed to have this massively concentrated short position, the most of any commodity traded on the exchange in silver, because it's needed. And, in 42, they were open about it. Yeah, we need silver for military. But now, even though we've been short supply demand for 4 straight years, it's just strangely off the supply demand numbers by the Silver Institute. And, it makes this kind of stuff makes you into a conspiratorialist and makes you feel like, yeah, put my tinfoil hat on, or is it real? I mean, why would 8 Western banks hold the largest concentrated short position in a commodity that is being voraciously accumulated? Why do they allow such massive rehypothecation? And why are they short between 4 and 6 billion ounces of silver on the LBMA at a period of time when there's a drive by much of the Southern Hemisphere to accumulate it? These are all the kind of questions I ask myself and come up with the same answer over and over and over again. The military industrial complex is very powerful, and they make money by keeping these wars going. They often are funding both sides, or they're involved all over the world in selling weapons. And most of what we've given the Ukraine in terms of aid has been in the form of weapons. And then, as Lindsey Graham says, we need to get our money back. So we're enriching the military-industrial complex by providing the weapons. And then after we destroy the country, we come in and steal all of their natural resources. I mean, the whole thing is just gross. But if you put it all together, you can see it. And I hate wearing that tinfoil hat, but is it, or is it real? Is it something that is right there in front of us, or are we all meant to sound crazy when we say these kinds of things? But why the hell would it be taken out of the supply-demand numbers? And why the hell are there 8 banks suppressing it? And why the hell is there that massive short position in London? And why the hell are they trading up to 3.5 times the annual global mine supply every single day? These are questions that I think, if you're honest with yourself, you come to the same conclusion that, silver is far more important than we are being led on. And in a game where the United States has been the place to park your money forever, it was easy to keep this illusion alive. But in an environment where that has changed, you can see why countries like Russia and India and China are doing the things that they're doing, why China's buying doré and concentrate all over the world, why India keeps buying it hand over fist, and now why Russia is saying, we're going to actually buy it for our state as well. Because I think it's far more important than any of us are being led to believe, due to the counterintuitive price action that is being controlled by a handful of Western banks. And according to what, Bart Chilton, who was told to back down, was a political decision. It's being managed, but all manipulations and all managements end badly, and they end poorly when the supply-demand fundamentals override them. And ultimately, I think that's where we'll go with silver, because it isn't just an industrial metal. It's far more important to the world than that. And I think that will ultimately bear fruit. I don't know when, but we're already on borrowed time, if you ask me.
Do these banks have an exit strategy in your view? You would expect that they would see this coming and know that they can't necessarily suppress the market forever. Do you think that they know at the end of the day they have to close these short positions and allow the value of silver to go where the market wants it to go? And do you think they have a plan in place for when they would allow that to happen?
Well, you would certainly think so. There was just over the last couple of weeks since the last commitment of traders report that I looked at, that was right after the election, after the price got hammered. The commercials just in that week covered 15,570 contracts of gold and 5,700 contracts in silver. The silver contract is 5,000 ounces. So yes, they are covering them, and they are slowly backing out. You can't do it too fast. If you do it too fast, the price jacks up and blows up everyone. I could see one of them breaking ranks and basically saying, because this has been a very collusive deal where you got 8 banks on the same page. One of them says, I'm out, guys. This is ridiculous. We're all going to get blown up. And one of them starts to cover, and then it's every man for himself type of situation. But if they don't, they're just playing foolishly right into the hands of the rest of the world, who is exploiting the ability to stand for delivery against us. And that's the key, is that these contracts have a delivery mechanism, and the countries that are doing it were never sophisticated or motivated or coordinated or wealthy enough, or had any desire to stand for delivery. They do now. And I think slowly that's what they are doing, not fast enough to alert the world, but slow enough to beat us at our own game. So yeah, I ultimately do think it's an existential threat to some of these banks, like Bank of America, who Ted Butler said had 1 billion ounces short in silver. And maybe Warren Buffett's selling some of his stock because he knows that this is the case, maybe not. But any bank that would be 1 billion ounces naked short of silver in an environment like this is insane. Yeah, it could indeed be a big problem for some of these Western banks.
This is a question that comes up a lot. Why doesn't Sean Kun and Keith Neumeyer and a lot of these silver mining company CEOs act as sort of an OPEC when it comes to the silver space and try to demand a certain price per ounce instead of leaving it up to the vagaries of what you're saying is essentially an obviously suppressed market? Would such a
Well,
thing
that's an
be
easy one.
possible? Yeah.
Well, I mean, only 25 to 30% of all the silver coming to market comes from guys like Sean and Keith. And Keith has withheld production before, and Dolly Varden is not in production. And so, they're in a more exploratory type of deal. And so when you talk about why don't more companies do this? Well, first and foremost, it's very labor intensive, cost intensive business. And so they're reliant upon the funding a lot of times and of the pay just like that of the commercial banks. Like they'll call JP Morgan and JP will say, okay, fine, the money's in your account, boom, deliver it to that refinery for us, is what they do. And because it's expensive, and when only a small portion of the silver comes from um, companies that are directly mining it, where the majority of it, 2/3 of it, is byproduct mining of other metals that they have no desire to play that game, uh, it's hard to do that. And so it's a valid question. And I give Keith a lot of credit for that. He's a businessman, he's not a geologist, and he understands it. But it's like spitting in the wind when you're the only company saying this and doing it, and the others don't follow suit. It's a valid question. If 90% of the silver came from primary silver miners, it might be easier to accomplish, but it's a very small amount, and many of them have been beaten up so badly over the years, their share price, and that they're cash starved. And so when they do pull metal out of the ground, they have to get paid for it, and they don't have the luxury of being able to withhold production. So valid question, but much harder to implement due to the circumstances than you would think.
Yeah, absolutely. And especially because so much silver, as you're touching on there, comes as a byproduct of lead, zinc, copper, other metals. You would have to get all of those mines on board too, which would be very difficult. I wonder what you're seeing when it comes to the retail demand side of things. We've heard that there's a lot of retail demand in places like China, in places like India. I've heard that there's been positive inflows into this, both silver and gold ETFs in the West more recently. What are you seeing when it comes to the retail demand for both silver and gold at Miles Franklin? And what are you hearing when it comes to the global picture for retail demand for precious metals?
Retail demand this year was slower than I would have assumed. It was still one of our best years ever. It was maybe 25% less than last year, which was insane. Um, Retail demand is still only represents a very small portion of the country. Rick Rule talks about it being 0.5% when you take the entire financial matrix from Joe and Jane Sixpack to the Harvard Endowment Fund. Um, I've noticed a larger expansion into uh, people who have never bought gold and silver before, much larger orders than we've done in the past, on a continual basis. But the person who was buying small amounts, kind of like during Silver Squeeze or during the last few years, who have been buying it because they think they'll become wealthy by owning it. That's a lot of the demand that's moved into cryptocurrencies. I don't want to cast a negative light on it. It's been great. Demand has been great, but in my opinion, not as strong as I would have expected. Now, I think, and with the Trump trade right now, it's relatively quiet. I believe that will change dramatically. I believe inflation is here to stay and it's not going anywhere. And by the time people understand and realize that, um, they'll run back to precious metals. But demand has been good, Jesse, but not as strong as one would think it should be with the fundamentals behind it. So I guess that probably just confuses people more than anything. Just simply to say it's been strong in my mind, should be stronger. Um, but you know, what does that mean? So I think it will get stronger. Um, but yeah, it's the majority. Let me put it to you this way: the majority of the business that we see and have seen over the last year has been in, and last several years has been in silver. Probably represents 80% of the business we do. It's really hard to ignore the value you find in silver. And if you understand what is being done to the price and what is being done to challenge it around the world, it's a no-brainer. The asymmetrical risk reward found in silver is unlike anything I've ever seen. And that means what is an asset that has very low downside and amazing upside? That to me is silver. So it represents the majority of the business we're doing. But I guess I come from a position where I think more people should own it logically. More people should own it. And I mean, you look at the 60-40 split as an example, where 60% stock, 40% bonds over the last years, you would have been crushed in that if you had owned gold and silver. It would have mitigated all of those losses. And so more people should have it. This is the whole theory behind the Ibbotson study, which is a group that was bought by Morningstar. They're a rating agency. They're a research company who basically said every single portfolio, when they did their analysis, that had a allocation to precious metals fared better than those that did not. And I guess I look at it from that standpoint, that it's still fringe where so few people actually own it. So maybe I didn't really answer that question right. Business is strong, but should be a lot stronger. It should be more recognized by the public, and maybe it's a banking crisis or something that awakens people and triggers them to look at precious metals. And I think that's when things get crazy, because there's just not enough supply out there to handle that type of rush. That's where people talk about a shortage, and it would happen for sure. It hasn't hit mainstream yet, is what I guess I'm really trying to say. And I think that to me is the disappointing part of it all. I think it will, but when it does, I think it goes from being readily available to not in the blink of an eye. If only 1/2 of 1% of the country is involved in it, and it went to 5%, just five, that's a tenfold increase in demand. And in 24 hours, this entire market would be upside down.
I was speaking to Jim Rogers the other day, and he was saying that if he was accumulating anything, he's literally buying absolutely nothing, not even fixed income. He's sitting very heavily in cash, holding on to some of his investments still. But he obviously holds a lot of gold and silver, and he said if he was going to buy more precious metals, he would undoubtedly buy silver because of how undervalued it is relative to gold. For people who are stacking precious metals out there, the question of gold versus silver, obviously holding both makes the most sense. Do you echo Jim's sentiments in that silver's probably the greater opportunity between the two metals at the moment?
Yeah, there's no question, man. I mean, asymmetrically, it is the best. An asset that is expanding in uses, military, green, digital, is being pushed to become a strategic metal by forces in Canada, is being accumulated by so many of these countries around the world, buying up all the concentrate in the doré, shipping it back to be refined. All of these stories that we hear about the huge short positions, the countries continually standing for delivery. All of these things tell me that, yeah, silver is the value of a generation. And it's hard to say that and be anything but completely sincere about it. It is. It has such low downside and such great upside. To me, it's literally the value of a generation. And I do mean that. And I've been accumulating it myself over gold simply because it offers that potential. Look, I think gold will go higher than people think possible. I really do believe that ultimately the Fed wants it to be revalued. Whether they do what Cynthia Loomis said, just revalue it, the same thing the head of the Dutch National Bank said, or let it stair step up, and use it to help liquefy the Fed's balance sheet at a much higher price. I think it will be. And I think it will be tied to a new system, whatever that new system looks like, whether it emanates from the BRICS nations backing their new settlement currency with gold, or whether it comes from the West and Trump pulls something out of his hat and surprises us all. and ties a new system to gold. However it works, I think gold will go higher than people think possible, and I think it will be tied to a new system. But there's a 90% correlation throughout all of history between silver and gold. Silver is wickedly undervalued by every metric, geologically and price history wise, going back 5,000 years with gold. I don't know of another asset that is as heavily used, as widely accumulated globally by big money, and at the same time wickedly undervalued the way silver is. And so, yeah, I mean, to me, there's no substitute.
I want to ask a question regarding storage of precious metals, and this comes up because I was speaking to somebody recently. Whenever somebody comes to me and says, I'm new to investing and I have some cash set aside, and what should I buy? I always say the first thing you should do is take a percentage of that and remove some of your wealth from counterparty risk and from the traditional financial system. That's step number one, and doing that is through physical gold or silver. I was speaking to a friend who lives in a pretty rough part of town, and I was saying, you need to get your hands on some kind of precious metals first. And he's saying, should I store it in a bank? I was saying, well, that kind of takes away the whole fact that you're using it as an insurance policy as well as a way to store wealth outside of the system. But yet, on the other hand, yeah, what if somebody did break into his house? So how do you look at storage? Are you a proponent of vaulting metals, of coming up with storage solutions? Do you think, in a really strict sense, that people have to be holding their own precious metals in their own possession? How do you deal with that conundrum?
I think you should if you can. I think you should hold it yourself. And you're right, it is an asset that has no counterparty liability when it's held in your own possession. We do have a storage program that I'm very proud of. I think we're the envy of the storage industry in North America. We have vaults all around North America with Brinks, and they're all completely and totally segregated. We have the only safe deposit box program that Brinks has ever offered. We have that in Vancouver and Toronto. Inside the vault, one key boxes where you hold the only key and the only spare. But when we talk about our locations, New York, Miami, Dallas, Salt Lake, Los Angeles, Montreal, Toronto, Vancouver. So we have 8 locations, and I have been working with Brinks for 20 years and never seen an ounce misplaced. I make money when people store, albeit not a lot, but we make money. And I would still tell people, yeah, you're far better off holding it in your own possession than allowing anyone custodianship of it, period. That doesn't work for everybody. But if you think about it, especially with gold, I mean, in this coffee cup, you could have $500,000 in gold, literally. You could probably stack 100 coins in there and, or more. And so you're talking about maybe not quite a 500,000, but 300,000-400,000 in a coffee cup. You could hide it pretty damn well. Silver is a little bit tougher. You could dig a hole in your backyard and be a midnight gardener. You could get a big house plant and put it on the bottom of the house plant. You could put it under a floorboard, put it up in the insulation in your attic. I mean, there's a million places you can hide stuff, and someone who breaks into your house doesn't have the time that you would to hide it. You're best to hold it yourself if you can, and the removal of counterparty risk is something that shouldn't be underestimated in a systemic world that we live in. But if that doesn't work, then choose a storage program where you're working with a company that has a great track record, a big balance sheet, and that you know where it is and can go retrieve it if you have to. There are storage programs where no one knows where it's stored, just that it's with a big company. Not good. You want to know where it is. Can I go retrieve it? Who's holding it for me? Is it completely and totally segregated? Not just allocated, but segregated. Allocated is pooled to a program. Segregated, it's in Jesse's name. And that's what you would want. Segregated, insured in your name in an institution where you could go retrieve it if you had to. So, yeah, I think storage for some people is you have no choice. But if you do have a choice, take physical possession of it. I think there are very few things in this world that seems to be getting more and more digital and more loss of privacy. It's one of the last few things that add to your privacy. And I think it's nice. You look to your family and say, look, this is for you someday, and no one knows it exists. And there's a lot of benefit to that. So physical possession to me always is option number one.
Well, I'll end our conversation today by opening the floor to you, Andy. Anything that's on your mind regarding the gold or silver markets or otherwise, anything you think investors and stackers should be paying attention to, wherever you want to take it, man. The floor is yours.
Jesse, I think we've covered an awful lot. I think these are very, very interesting times, and I think it's important to not lose track of where we are. We're a country that is massively, massively indebted, and even if, and again, I applaud what Trump is trying to do. You bring in, Vivek and Elon to trim all the fat. Even if they were to trim a couple $1 trillion off of the balance sheet, which would be amazing, right? That would still leave a deficit of, let's say, $1 trillion plus a year. So Trump comes into office with a $36 trillion debt and walks out with a $41 trillion debt. Best case scenario. And in an environment where he wants to keep interest rates low, which again weakens the value of the dollar. He wants to lower taxes. Great. He wants to put on tariffs. This is all very inflationary. It's all very gold and silver friendly. I would say that, yes, we should all be very optimistic that maybe we get our culture back, that we're heading in the right direction, right? And removing the inefficiencies of government, paring down all of the waste. That's all fantastic. But even the Congressional Budget Office would tell you that, which is a nonpartisan group, if the budget was balanced today, which it's not, by 2031, 100% of all tax revenue will go just to pay the interest on the debt and the mandatory entitlements like Social Security and Medicare, which are off balance sheet. If they really wanted to fix things, they would have to go after things like Social Security, Medicare, military pensions, and these kinds of off-limit balance sheet problems that they won't do. And so, how can the United States retain its dominance in terms of financially and militarily when things like military spending is discretional? 100% of all the discretional items within just a few years will need to be borrowed into existence. In other words, we're so far down a path of indebtedness that, there's really not an easy solution. And it would come with a great deal of pain. Yes, it would be wonderful if he were to trim everything, bring back our manufacturing capacity, build the factories, train people, do all of the things to reignite the engine of growth in this country. But that would come with great pain and a great period of time we'd head into a depression. Let's not lose sight of where we are in the grand scheme of things. There's a lot of reason to be hopeful and a lot of reason to be optimistic that we're heading in the right direction. If nothing else, we get our country back, at least in terms of, what it means to be an American and our culture back. But in terms of reasons to be defensive in terms of your finances, that's not changing. In fact, it's strange. We could see a period of time where stocks do well, cryptocurrencies do well, and gold does well in the face of a dollar that is losing purchasing power and low interest rates, and that doesn't take into account what the rest of the world is doing. So confusing time for a lot of people. I get it. It's on one hand very optimistic. On the other hand, I think it's really, really important to not lose sight of where we are part of me thinks, is Trump going to be here to oversee a reset? We have to have that reset one way or the other. We have to. Things have to reset. And is he intentionally going to reset the system and start over? He is a bankruptcy expert. Or is it something that it just happens all by itself? I don't know. I guess what I'm trying to say, Jesse, is that the gold and silver bull market is far from being over, um, based upon where we are in the game. But at least we have someone that can get us to the other side in not such a dirty manner. Maybe he can unite the country at the same time. Maybe his cabinet can help unite the country and make us realize that we need to go through a kind of like the Shawshank Redemption. We had to crawl through that tunnel crap to get to the other side. Well, we have to do that to some degree. Um, whether it means a depression or something worse, but to get to the other side, to take back our manufacturing capacity, to become an engine of growth, instead of really exporting nothing but inflation. So reasons to be defensive are still here, but it is a risk-on environment right now, and that could certainly provide opportunities in other asset classes too. So I'm not saying gold and silver are the only place to be, but I am saying that the reason to be in gold and silver are far from over.
Fantastic thoughts. As always, greatly enjoy our conversations, Andy. Tell us about Miles Franklin Precious Metals. Tell us about your new YouTube channel as well and where people can find that.
Yep, that's little by little on YouTube. We're up to over 29,000 subscribers in just a few months, which really blows me away. And I thank everyone for coming on and watching. And you're going to be getting an invite very soon, Jesse, to come on the show, and you'll see it's a little bit more challenging to be on the other side of the. Well, actually, I think it's more challenging to be on your side. I'd rather be on the other side answering questions. Thinking of the proper questions to ask and researching the person and their views is a little tougher. So I give you lots of props for that. That's little by little on YouTube. MilesFranklin.com. Our prices that people would want to see that are far better than what we post. info@milesfranklin.com, and ask for our price sheet. No obligation. Ask any questions. Say you heard about us on Commodity Culture, but the price sheet that we will send out will be as good or better than anywhere in North America. And, I appreciate coming on your show very, very much, Jesse. You're one of the few people in the industry that, you are the class of what you do. And I always enjoy our conversations. So thanks for having me back on, man.
Well, it's an honor. And I will put links in the description below to the YouTube channel, as well as milesfranklin.com, the email. Thank you once again, Andy. It's been a blast.
Real quick, will I see you in Vancouver at Jay Martin's Vancouver Resource Investment Conference in January? Am I going to see you up there?
You absolutely will, and chances are, if you're doing any panels, I'll probably be hosting one of them.
Yeah, and for people, this is not intentional, but I would tell you that Jay's show, I guess I will give it a plug intentionally. It's one of the finest that I ever. There's one of only two that I go to. I go to his and to Rick Rule's. I would encourage people to go. Great lineup, great presentation. Jay's a great guy. It's one of the real important shows to go to. So I look forward to seeing you there. And the first beer is on me, and maybe we can pick up where we left off and do another one of these in January.
Absolutely, I'm looking forward to it.
Likewise, buddy.
And thank you for joining us today. This episode was brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.